So, welcome all to this evening's webinar. I hope we've all had a good weekend. Just to let you know what I'm going to do going forward is move these to a Monday night. So, we'll have these webinars on a Monday rather than a Sunday. This is because obviously, as we kind of saw yesterday, you get big gaps in the market come Sunday and it can kind of like quash some analysis. So, rather get the market set on a Monday and then we can pick up there for the rest of the week going forward. So, been a lot happening over this weekend, if anything. Just in regards to the news, which we'll touch on in a minute. So, obviously, what I'll do is get the calendar and then discuss any other news that might affect the markets. I'm guessing you'll know, you would have seen on the news what's happened over the weekend, and it's likely to cause some bigger, wider effects within the markets, and obviously some pairs and commodities that we trade. So, first of all, just going over to the economic calendar. It was a very dry day today. Not really much happens on a Monday anyway. Don't really get that much news. Tomorrow, again, it's pretty quiet. We've just got the Oz policy meeting minutes overnight. And then Wednesday is where it really starts getting a bit meaty. So as you can see with the pound, first of all, we've got CPI in the morning, which is obviously the inflation data. So I think it may come out a bit higher than that. I don't think inflation is going to be dropping by that much, if anything, just due to the fact that the pound severely weakened over the course of the last month. And normally when a currency tends to weaken, so looking at August data, it's all the way down here. So it's released in September, but it's August data. So we did see quite a bit of a dramatic fall over the last few months. So I'm probably expecting it to come out a little bit higher. If it does, then it does strengthen the case for a rate hike from the Bank of England. But whether that will happen is it won't happen until obviously they know what's going on with Brexit. So they don't really want to make any moves until they know whether we're leaving with a deal, without a deal, etc. And again, that's still up in the air. So as you saw last week, it was written into law that the UK cannot leave the European Union or the EU without a deal on the 31st of October. But obviously Boris Johnson is pressing ahead with his plans to leave on the 31st of October with a deal or no deal. So whether he's going to break the law or not, who knows? Supposedly there has been a loophole discovered that they can probably get out of it and kind of swerve this law. So things are going to get pretty messy. There is a court case tomorrow happening at the Supreme Court to see whether Boris Johnson basically lied to the Queen to get Parliament prorogued. Which again, it's going to be very interesting to see the outcome of that case, because normally the courts don't really get involved in politics, and politics don't really get involved in the court system. They kind of leave each other to it. So it should be quite interesting to see how that one turns out, what comes out of it. If it is known that he didn't lie to, if he knows that he did lie to Parliament, did lie to the Queen, sorry, then Parliament could be recalled, and that will mean that the court system has interfered with politics, which obviously won't be favoured by the current government system. So watch this space on some news or pound once that ruling comes out. If it does come out tomorrow, we don't know, it's started to be heard. So just watch this space basically on that. So because the pound was so weak over the course of August, I'll probably expect this to be a little bit higher. I'll see how the news comes out before I make any pound trades, and we will kind of go from there. Again, Euro CPI is coming out at 10 o'clock, so this does say low impact, but it is quite important to the ECB in regards to inflation, because at the moment they've got a 2% core CPI inflation target, which they have failed to get near it for a good long period of time. The highest was back in May when they peaked at that, and it's gone down since. So it is declining again. Then we've got CAD CPI, which is only monthly data, but again, you can see that they are expecting a bit of a downturn on inflation. Again, it's been a bit inconsistent over the last course of sort of 3 months, so down, up, and expecting it to come down again. Should this come down, then you should see the CAD set off a little bit, but the CAD has had a bit of strength added to it today. Can anyone tell me why? Why has the CAD had some strength today? What's happened in the markets to cause the CAD to strengthen? Yeah, exactly. So the price of oil has been on one. So the oil did gap up about 600 pips last night. Um, that doesn't show the gap there. There was a gap when the market opened, as you can see. So it closed at about 54.85, and then when we saw it opened at about 60. So this was obviously caused due to what happened in Saudi Arabia. So I did put some news articles in over the weekend in the groups, and what happened was, well, first of all, the Yemeni rebels supposedly bombed Armaco, I think they're called Armaco's the oil production site, and that produces a huge amount of oil. So they say that it produces about 5% of the world's global oil supply, which is huge. So the price actually moved up about 15% overnight. Well, more than that, about 20% overnight, if anything. And which is, yeah, it's a pretty big deal. So if you have a big disruption within the supply of this, then it is likely that you're going to see the price move upwards, which we have seen. Be careful, because a few people were hoping to close this gap on trades, but when you get fundamentals this size, which is so well publicized within the news, you've got to be careful, because you're not going to get them gaps closed. That's a huge gap. That's because obviously all the institutions bought once they heard this was going to happen, and that's why it opened up that big. But us as retail traders, we couldn't really get involved in it. There has been some developments today with the USA blaming Iran on this happening. Whether Iran done it or not, I have no idea. But if what it does look like is that the US have intelligence that, and the Saudis have intelligence that the weapons come from Iran. So this is, if this is found to be true, because obviously we don't know yet, if this is found to be true, then this is really going to cause tensions, like, to another level. Although Iran did supposedly bomb an oil tanker beforehand, that's a very small scale thing compared to obviously what's happened here. And these are the sort of things that will cause wars because of the amount of impact that this is going to have on the markets. So we basically got to watch this space and look. But if this does cause a war with Iran, what do you think is going to happen to oil? So do you think the price of oil is going to drop, or do you think it's going to continue to go upwards? So if the US end up going to war with Iran, and the Saudis obviously will get involved because they bombed their oil production site, do you think? So why do you think it will drop? Because if Iran go to war, obviously they're oil producers as well. So the price of oil should, good, phew, I was worried there. So the price of oil could continue to climb. So we just got to watch out to see if any developments are in there, because again, it will cause disruption to supply. So if it is found to be Iran has done this, then you can probably imagine that there's going to be some sort of retaliation tactic. And it's already been announced, or rumors are going around, that the US is set to bomb, or US and Saudis are set to bomb some Iranian sites. So we could see some more uncertainty in the oil market, causing it to continue to go upwards. But at the moment, we can see this is, especially after looking at today's candle, we can see this is hugely bullish. So because we're in a bullish trend now, we've broken these highs. You want to try and ideally look for previous support to try and buy out if we get a pullback, and that's a big if. So if we go back and look at the charts just here in oil, you'd want to look at this level, see if we start forming support here, or even further down at this level if it gets down there, which is very unlikely. Especially at the moment, because it doesn't look like tensions are actually going to settle. So where could oil go to? If we go back and look at the weekly, we've got a lot of room to move upwards. So if you look back at the highs from last year, see the highs from last year is around the 77 mark, or just before the 77 mark. So we can see the weekly created a low, lower high, higher low, and now we've created a higher high. So ideally we want to wait for little pullbacks before maybe beating these highs and going further upwards. So on the back of obviously Saudi Arabia's production being affected, because they produce about 11 million barrels of oil a day, and they're saying, about 12 million barrels. They're saying they're roughly going to be affected by about 6 million barrels a day, and it's not going to take days to sort this out. It's going to take weeks. So we're looking at weeks of uncertainty in regards to oil supply. So on the back of that announcement, Donald Trump has announced that they will release, they will step up and plug in the gap by releasing a lot of the US reserves that they hold onto the market if needed. I think he done that. When did he do that? I think he done that this morning. So that's where you start to see it come down. But obviously now we've seen it go back up because tensions are starting to rise, with obviously finger being pointed back at Iran. So we're in for some interesting times ahead in regards to this. And also, if we do see a war go on between the US, Saudi, and Iran, what else is likely to increase? Right, so Saudi foreign come out with statements now, literally a minute ago, saying the preliminary investigation shows that Iranian weapons were used during the Aramco attack. So it doesn't look good. So what else is likely to strengthen should this all kick off? So what do you think, Sean, Steve, Doug? So yeah, gold will be one of them. That's right, mate. JPY is another. CAD is another. So yeah, the commodities. So what people tend to do in these sort of times is go to physical assets. Oil, gold. People might even go to other ones that we don't really trade. So also in times of these sort of uncertainty, this could affect business. So it could be likely that stocks might start to fall as well. And this again highlights the JPY strength. So that's where the fundamentals are going to kind of shift with these. So it's up to us to try and get some technicals in to try and marry them up basically and match them. So the dollar's been pretty resilient today to the knees, because they're also seen as a safe haven, because they pay relatively good interest as well, and their economy is doing really well. And being honest, they're the ultimate safe haven as well as actual currency. So you do have crude oil inventories come out. This is only due to US stock, so it's not the world stock. So that obviously won't be affected by what's happened over the weekend. Then we have the Federal Reserve at 7 p.m. tomorrow night. And as you can see here, the market is expecting a cut of interest rates. So the dollar's been really strong lately and it's expecting a cut of interest rates. Should this obviously not happen, you should see the dollar fly, because obviously the market is pricing in, and I've kind of priced in a while ago that this is going to happen, but the dollar has been strong recently, because at the end of the day, the data has still been really strong for the dollar. The dollar's data has not really slipped at all. So being honest, I probably won't be in the dollar trade for this news. I'll probably wait for it to come out and see what happens, because half an hour later we do have Fed Chair Powell be talking at a press conference, and again it can get pretty messy. So what tends to happen with these central bank reports is that what tends to happen on these central bank reports is that the market will fly one way on this, and then it flies the other way on the press conference, as we saw with the euro last week. So the euro really gained strength after Mario Draghi stopped talking. Then you got New Zealand GDP. So this is their gross domestic product. So how they've done for business over the last few months. Expecting a 0.4% increase, and that's down from the previous quarter where they got 0.6% increase. But as you can see over a relative period of time, 0.4 is pretty low considering looking at the last trend of the last 3 years. So don't be surprised if it does come in above tomorrow. And hopefully we'll still be in our Euro New Zealand trade and have our stop loss at entry for this news. And hopefully it can fly our way. So this is really a week for central bank interest rates. Then you've got the Japanese one coming out at some point Thursday morning, roughly between 5 and 6 o'clock in the morning. It normally comes out. Then you've got the press conference not long after that. There's no times there as to when it's going to happen. And you don't normally get big moves off the back of this because the Japanese don't really change their monetary policy. And then at 8:30, you've got the SMB. So this is the Swiss National Bank with theirs. And again, they're expected to hold rates. They do like to keep their currency weak. So over the course of this week, the Swiss, if there is a rise in tensions within the world, the Swiss may strengthen because people putting their money into safe haven currencies. And then obviously on the back of this, they might choose to weaken it a little bit, if anything, because they do like to keep their currency weak. Pound retail sales month on month. Quite surprised that this one is minus 0.2%, if anything, because this is based on August figures. So because August is normally quite good month for some consumer spending. So we normally see a rise in consumer spending within August. So I'd be very surprised if it comes out at that rate or lower. So if you look back at the other currencies that we trade, such as the US dollar, good retail data last week, had I think 2 weeks ago. So other countries are producing good data on this. So consumer spending hasn't stopped. So I wouldn't expect this to come out there. I'd expect it to come out probably a bit higher due to it being summer months. And it was pretty hot in August as well, if you think about it. And that's obviously when the UK tend to spend more money. So yeah, it's a very scary week ahead with all these central bank things going on, if anything. Then you've obviously got a pound central bank meeting at 12 o'clock that day on Thursday. So again, another central bank. They should be relatively happy with the data. What's gone on? The jobs market is still strong. Although GDP, they'll probably mention about the GDP contraction, what happened last quarter, but also say that we've kind of bounced back so far this quarter. They may cut growth forecasts, but what they have done is that they've really backed away from being so demeaning around the no-deal Brexit, because obviously that's one thing that was panicking them. So I think last week Mark Carney gave an interview and he said it won't be as bad as what they first initially thought on the back of a no-deal Brexit. Then you've got US Fed manufacturing, really much. And then Friday just had retail sales. So Wednesday and Thursday are going to be very, very busy within the markets, if anything. Look at all that high impact news just on Wednesday and Thursday. So basically just watch your space. I'd love to tell you which way the news is going to go and how the market is going to react after it each time, but it's not as easy as that, if anything. Very hard to determine. So, first of all, just put the pairs that you want me to look up for you in the chat, and so I can just jot them down and add them to the list that I'm going to go through. And we will go from there. I'll just give you a moment to type them in. And also it does show me that you've looked at some pairs as well. Yeah, that's fine, mate. I'll look at anything you want. Yeah, I'm gonna go over the pairs that we're currently in. Cool. Right. So, first of all, looking at the, not going to go into this channel too much because we talk about it every week, but we're still trading inside it. We made a higher high. We've come back down. Looked like we formed support here around the 70 fib. Don't worry about this last hour candle here because it's been doing that last few weeks. I don't know why. But yeah, it looks like now we're ready for a bounce and to move a bit higher, or at least get back up to these highs. It all depends how things go before Wednesday on this, because Wednesday the dollar could obviously fly or fall, which is obvious, but it just depends how the market reacts to this. But at the moment, we've got a very strong bullish candle today, which has formed. So we would be expecting to maybe go a bit higher. So what we might look for now is that now we've got back down to this level, we might look for a little pullback tomorrow, back there to this level, and then we can look to maybe take longs on the dollar once we see that little pullback done. So we might only reach the highs here. Just depends how it goes over the next couple of days. But it is rather bullish. I look at this week's candle already, how bullish it is. Last week's candle was disgusting in terms of that, but again, we've always got to rule out this last hour on Friday because it just messes up for some reason. I've no idea why, but it just completely messes up. Moving over to Euro USD. I did try and get out this a bit early, but because it was Monday, I tend to just more grab pips and get out because Mondays are a bit of a harder day to trade. So it's trying to take your pips and run. But again, strong bearish candle today. This is the last level of support. So again, if the dollar pulls back, the dollar index pulls back, then this could pull back further before some more downside. This is just in regards to technicals. We do look at this, for example. We can see that this has been broken, so we might not get that big pullback. But again, we do have too far back there. This gap that still hasn't been filled. As you can see, it's that one there. But one thing concerning is that the weekly looks like we found a bit of support here. So maybe this could be a pullback before maybe a bit of move upwards. Especially if the dollar come out quite negative in regards to Wednesday. If they turn around and say, yeah, we've done a cut today and we're going to do a cut again in December, then expect the dollar to sell off a bit. And that obviously causes Euro USD to rise. Going back to the daily, we can see that we want to see this structure broken in order to broken, retested in order for longer term sort of longs, if anything. So if we do break back up inside this level, then obviously we could be now going higher. But this bit has broken now, which is quite significant. If I was a gambling man, I'd probably say we're going to go lower. But yeah, we did get a strong move there, create a lower low, retrace back to this level, around the 70 fib, and this descending trend line. So we took a few pips off it Friday and took some more today. Quite a slow moving pair as well. So we don't expect to get the whole world out of it. So gold has been rather interesting. Again, you can see we've got support here forming at around 1496 that we failed to break the low of this candle today. As you can see, we've broken the high of this candle, and it does look like it's going to close bullish. So I would not be surprised to see us. Remember we spoke last week about this head and shoulders pattern? Would not be surprised to see us go up to around 15.25 before the markets may fall again. Because people will be buying the dollar in uncertain terms as well. So let's go to the weekly. That last week's finished strong and bearish. So this at the moment could just be a pullback before some more downside. But just to be sure, if you want to wait for a break of this support, break close below it, come back and retest, then it could maybe move down further. For myself personally, I want to see a little swing upwards, and then we'll get this break of this head and shoulder neckline. So looking down at the 4 hourly, or should go down to the hourly, we can see that we do have a pattern developing here. What pattern do we see this? So let's see who's going to get it. So in our price action or our technical analysis section, what is this? Yeah, exactly. We've got an inverse head and shoulders, spot on. So that's why once we clear this level here at around 15.08 and close above it, that's when we could start to head grab about 30 odd pips off it today, and I'll show you why I actually took it. So basically saw it break out of this, now set a buy limit at around this level, and we just literally took it for 30 odd pips where it just pulled back and then moved up. But now we have come back, retested it, and now it looks like we're closing bullish on the back of it. So we could be coming back up to this level here. So if you do want proper to sort of sit there and wait, and you wait for that to happen, retest this as support. As you can see, look, resistance, resistance, resistance. Just by looking left all the way through, you can see support, support, resistance. So once this is cleared, then that leg upwards to around 15.25 could well be possible. And if we go from the high and use the fib, where do you think that's going to land? So right at 50%. So you can start possibly looking for shorts at around this level. Doesn't mean we won't take the long. We can still take the long and take advantage of it. Anyone have any different analysis on gold? Markets have been very kind today. Good, glad to see we're all on the same page. So watch this space on this one. Oops. Yeah, so we're starting to slow down at this level on oil. We have created some good RSI divergence, so we could see, might start to see a bit of a correction. You can see you got a high, lower high, you got your high, higher high. And we are getting some price action there now as well. But by looking at the bigger time frames, it'll give you a bit more of an idea of where oil can go. So this is the first trouble area on the weekly. So where you can see resistance, again, resistance, support, support, acted as resistance. So we can potentially go from 64.43 and then see if there's maybe a turnaround there, or a level higher, that would be 66.30, which coincides with the 70 fib from this down move here. So I was previously in this consolidation box, hasn't actually bounced off of it and used it as support, but would you really expect this to come back down now, start using it as support, unless there's a huge shift in the news, the fundamental news? I highly doubt it. So what we're going to start doing is looking at potential long positions. We've broken out into a bullish trend. And where you look at it now, there's a couple of levels, either there. All pretty much over there. What you do want to start seeing is this just trickle down. You don't want to see big, strong impulse candles. Can anyone tell me why you don't want to see big, strong impulse candles coming back? So if you start to see big, strong impulse candles, then it's likely that it's going to continue down further, because obviously something's happened to cause them big, strong impulse candles. If you see weak ones, then it's likely that it's just a little pullback before we move higher. And that applies to everything. That's what helps with you understanding continuation strategies. So ideally, we want to see this level touch. Wherever that will happen, we'll just keep an eye out for this level here in regards to looking for buys. So New Zealand CAD is another one that I've got on the radar. So if we're looking at this now as a pair, would you say that's a bullish trend or a bearish trend? Bullish or bearish? So yeah, the bears are in control at the moment. So you can see that we're making lower lows, lower highs, and we're probably going to go on and make a lower low. But what we can see here is that we have reached oversold levels. So I'm expecting this to come down, beat the low of this, and then maybe get to the bottom of this channel and maybe look to turn around for it up to the upside. And obviously, if the New Zealand data comes out strong, that's going to be the reason why this is going to move heavily to the upside. So with oil being so strong, I do expect this to come down further. So in terms of marking up a price, I do obviously try and, but what I'd have thought, because this was the previous low and then we had sort of a rejection off of here, we've probably got a lot of stop losses long underneath this level at the moment. So we're probably going to come down a bit lower, wipe out these stop losses, and then maybe we're going to look for a bounce upwards, with this being the first target, and then so on back up here being the second. So right, let's mark our price up for New Zealand CAD. Which the first level is going to be roughly the wrong thing. So I'm roughly going to see how it looks at the bottom of this channel, and that's around the 83 handle. And it should be obviously getting, this would be our first target right there, because obviously just before you can see the resistance that is there. So you can't assume the resistance level is going to break because you put your TP above it. You've just got to keep an eye out for when it gets to there, and if it does get to there, fantastic. If it breaks through, fantastic. Maybe you can look at going a bit higher. So that's one level marked out for obviously New Zealand CAD. But if that breaks through this, then we're going to look obviously looking at 82.50. So I'm going to wait for some support to be formed before making a decision on this buy. But as you can see, gap that formed overnight close and then move downwards. And if you look at this, so look at the daily candle, you can see that it's closed pretty bearish. So I wouldn't be surprised for it to go further down. It's pretty much a nice break, retest, and then move downwards. So I'm expecting this to continue down. And then obviously we'll look for buying opportunities to ride it back upwards. So what are the New Zealand Central Bank currently doing at the moment? So what have they been doing over the last couple of meetings? Yeah, exactly. They're cutting interest rates. So they're cutting interest rates. That's obviously causing them to weaken. But with the data, it should start to pick up because the interest rates have been cut. When interest rates cut, then normally businesses tend to lend more money. People at homes tend to spend more money. And that can all contribute towards the GDP of an economy. So yeah, watch this space on that one. The one that we're currently in at the moment, I haven't looked at it since, I think it's gone up a little bit, which is a bit annoying. But I will continue to monitor this over the next couple of hours just to see what happens. But where you look on the daily now, you can see that we've had a break of this trend line, strong move down, found some support at this level, pull back to the 70% fib. Because it's sat just below the 70% fib, that's why I decided to take a short, because I feel that it may continue to ride it down a bit. Especially if we don't move a lot tomorrow. It should be fine to continue downwards. And just if anyone notices with these red lines that I have going across, these are obviously for recent support and resistance. These little dotted ones are for ones on like resistance on bigger time frames, such as weekly, monthly. Just so it gives you an idea, we might see some big players come back into the market. And then obviously, if we did make a good move down, we'd just look at these sort of areas for potential trouble areas. So if you look there, resistance, 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 this could have started acting as support. USD CAD, again, we're in this one. Does look like it's going to finish strong and bearish on this candle. rejection off of the S2 pivot point, break of this trend line, right at the 61.8 fib. And today we've gapped down and it looks like it's going to close bearish. So should it does, this will be our first sort of target, 140.32. Obviously you've got support and resistance. And then if all that fails, then obviously we'll be going a little bit lower back to these lows. Do we have any questions so far on what I've been through? Are we all right? Good, good. So ideally tomorrow the low of this candle's broken, and then obviously we're going to continue down towards target. So with safe havens looking like they might increase in strength over the course of this, what we've got to look at now is obviously euro yen. So big downtrend. We've now broken and closed above these highs, making a higher high. So what we're going to tend to wait and do is see if it makes a higher low, and then obviously look to buy it upwards again. Because now, once all these are taken out, we've now broken up into a bullish trend. So what I've done is draw the Fibonacci from bottom to top and just literally looked at this level, which is good previous support, resistance, broke, retested, and then gone up. And because of the gap today, it looks like it's been closed. I do feel we're going to go down a little bit further before going up. So I've got, obviously, the first point of interest I've got is this level, 118.20 to buy at. Not necessarily mean I'm going to buy at 118.20, but just want to see whether we can get some support there on the markets, because we do have the monthly pivot point just below it. So you could potentially see a few buyers coming back into the market on the back of that. Should that fail, then we'll look at where this is. So with us now sitting at a higher high, I've got this marked up at 118.20 or 117.50-ish level to look for potential buy opportunities for it to pull back to and then move upwards. And again, not to mean to say that I won't short this, especially with all the tensions in the world going at the moment. It would be quite all right to try and find a position on JPY that you can buy, because obviously you can see over the last course of a couple of weeks is tended to move upwards. So if you are going to short, just mark these up as potential sticking areas, 1, 2, and then obviously 3 down here if you're looking to hold it for that long. So it's not just about planning an effective trade, it's about planning where your trade might slip up at as it's going along. So when I mean slip up at, I mean obviously go from support to resistance. Look at, plan the journey of your trades. And go from there. It's pretty much the same across all pound pairs, really, across all yen pairs. Again, this is broken out of this structure. We haven't retested this structure here. So if we was to move this upwards, which we've got a fib drawn in there, so I don't need to do it again. So let me just get his fib. So what I'm going to look for is we're going to potentially get back in a short. So I know I got out of one earlier, not for a lot of pips, just because we had potentially speeches going on with Boris Johnson, etc. So we've got out of pound pairs just in case we tended to nosedive. So I'm going to look for another position getting in this short. Potentially, I don't think it's going to get that far, but maybe potentially back down to at least 132.30 where this pivot is. We did get quite overbought on the RSI, which is just a bit of an indication. And then obviously here we can see it, we've made a lower high, but we've made a higher high here on the charts. Is this making sense in terms of the yen pairs? So what might I do to wait for an entry in this? So I may possibly wait for a break of this. So maybe it's not. Resistance, resistance, support. So I might actually wait for this to happen. $131. Especially as it looks like Boris Johnson's keeping no deal on the table and ignoring the law that was passed last week. As you do. So something like that might cause me to get in on a short position again. So at the moment, all we're doing is ranging. You don't really want to be stuck in something that's ranging, because if you're stuck in something that's ranging, there's more guesswork as to where it's going to go. It will cause you more panic because you'll be looking at it. I do tend to have there's support, resistance, resistance, etc. So USD Swiss. Let me just sort this out. So I was looking at potential shorts from up here. Did hit there last week. Today's candles finished rather bullish. So we've had a bit of a push up there, gap down, and then obviously we finished strong and bullish today. So where am I potentially looking at to get in the markets? So because we finished strong and bullish today, we might have a little bit more of a push up. But it does depend on, obviously, if this candle's closed like these, such as like shooting stars, etc., then it is likely that it could just drop down from there. But ideally, what I want to kind of see is this. So we're going to go a little bit more of a shove upwards, and then a shove downwards. But look, this is resistance here on the daily. If it does break it, then yeah, it'll probably move up to around these levels before the next sort of trouble area. But you do want to see a bit of, obviously, like here, you can see where all these candles are slowing down and not closing above the highs of the previous ones. You might see that there before coming downwards. And even when you start looking at targets, you obviously look for, again, some support and resistance. So look for some support, which would be around this level, around 98.75. Then you want to go a bit further down. Probably want to look at this level. See resistance, resistance, resistance. Maybe a little bit higher, a bit of support, support, support. And then this level is the second target, which is around the 98 handle. So if the dollar does weaken off on the back of Wednesday's news, then obviously you're likely to see the Swiss, or you will see the Swiss strengthen as a whole currency as it is. Is that the same analysis that you had on it, or have you got anything else? Because at the moment, if we look here, from this rejection from the resistance, you had 1, 2, 3 candles all the way down here. Look how many candles it's taken to come back up. It's taking a lot of candles to come back up. So again, what you can do So I'm having a bit of a meltdown. So it's got a perfect price off what we want to see. Because obviously everyone that's going to short at these levels, all their stops going to be above here. So hopefully they get wiped out, get us to a position where we can get a good sell after all these people that are shorting are out the market, and then obviously we can look for a move downwards to the 98 level. New Zealand is another interesting one. We're coming up to the 78.6 fib level. We have broken out past this. We haven't really come back and retested this previous structure. But just looking from the highs here, just move down, come back up, strong bullish candle, bit of a slow pull down. So a bit of a slowing candle today that might finish as a doji. So again, we might see that move downwards. And where you're looking at sticking points, obviously this is going to be the first sticking point. So if you do get in at, say, the 78.6, which is 169.50, this is likely to be your first trouble area, which is 193.80. So it's still a lot of pips in there that can be made. But as you can see, be careful with this pair because it's not just going to go down here and just break it all the way down. Again, what pattern can we see on here? So look at the patterns. What pattern can you see? Don't get very annoyed with being in a trade or not being in a trade and seeing a big move. That's going to affect your emotions going forward. Trading is about missing opportunities, and you've got to learn to accept them. Detach them emotions away. As long as you're making pips, don't matter. Yeah, exactly. So there's good inverse head and shoulders here. So if you are to get in a bit higher, I'm just hoping to see a bit of a small correction down. This will be your first sort of trouble area that you're going to look at. It's only when you break back up inside here. So say, for instance, this broke and this retested as resistance. So just say, for example, so you just went back inside, back up like that. And then you sold from here, and this started acting as resistance again, then you'll get a good move down. You're going to hold it for a longer period of time because we would have made a lower high. This one's a bit of a popcorn moment. We just sit there and wait and watch and see what happens. So Euro was. It does look like we're forming some support here at the monthly S1 pivot, as you can see. So let's zoom in a bit. So we do have support here previously. Support here previously. Resistance, resistance, support. Support. So this is quite a good level that we're sitting at here. We've had rejection off of. All we're doing is consolidating, and we're finding a bit of support around this level here, around 116, 60.20, which we're not too far off now. So what you want to see, ideally, is a bullish candle, a strong 4-hour bullish candle off of this level, and then maybe you can look at taking some longs. And then your longs would only really want to be up to around here, where this previous support has been. So that'll take you from 160.10 up to 163.10. So again, still a good amount of pips in there. But you do want to see that price action first. Some people would even wait for a daily support at that level. Yeah, someone said it looks like an inverse head and shoulders, like that, don't you? But being honest, I don't really like them sort of ones, if anything. So I won't really pay much attention to that pattern. I'll just look at the structure. So we are at a lower low. So I'd expect us to go up, maybe make a lower high, which should hopefully be around this sort of level, and then move downwards. So does anyone have any other pairs that we look at? Because I haven't got that many tonight, because we've done a few of them today, and I feel that we should be all right on that front. Oh, you're in New Zealand, sorry. So as we can see here, moved down, created a lower low, formed some support, moved up, touched the 70 fib, and hopefully we'll start to see this move downwards. Just off the 70 daily 70 fib level. Target's not really being that high at all, really. Being very realistic, my target's back down to this support. So I'm going to hold this and see where this goes. I've probably got in about 10, 15 pips too early. I'd rather be in 10 pips too early than not getting it at all. But just what I'd say is just look at structure, look at the market, and then just be patient and wait for things to happen. Pick a price that you want to buy at. So ideally, you want to be buying at some form of support, and you want to be selling at some form of resistance. But let the price develop and become support and resistance there before making the decision. Don't just think, right, there's support. I'm going to buy it as soon as it hits that level, because that's not really the way you want to go. You want to start seeing some support form. So, like with these, for example, or with these, you can see supports forming. There's no hurry to get into the trade. Let it form, let it relax, and then it'll move upwards. Again, here, resistance. It's come back. It's not just bounced off it straight away. It's consolidated before you start getting your rejection candles. So I was waiting and then forget which one I was waiting for. So what you want to do is start using some notes then. Start using some notes in regards to putting it down, put a reminder in your phone so you don't forget which one you're waiting for. So do we have any other questions at all before I end this webinar here? Or any more pairs that you want me to look at? So trading can be as straightforward as you want it to be. You just got to put planning in to make it more straightforward. I was asked CAD Swiss, which is fine. So, CAD Swiss today, if we look at it, we could potentially seen a higher low be formed now, broken out this structure, made a higher here, come back down, made a higher low, but a bullish candle. Just off this move up here, see off the 618 fib. With oil, if that's going to keep powering through, then potentially we're going to keep on powering through. You can see 75.80 maybe being touched, or even up to 76.20. 76.20 would be sort of ideal. But if you're going to get up to these sort of levels, again, look at all this consolidation on the daily. before it actually made its move down. Again, some consolidation, another touch on it on a daily before moving down. And again, comes back up to this level, consolidates before moving down. So what I'd say is that we're coming up to huge bits of resistance on here. We've got it here. We've got this descending trend line here. We've got support resistance just above it there as well. So I think we're going to go a bit higher up to these sort of levels, and then maybe up to 76.20 before maybe seeing a turn. But because Swiss is a safe haven currency, has been used for oil, and oil's flying, it could be a bit of a slower move on. I'll pop the recording in the group. I'll pop the recording in the group and just whack on it instead of me going through it again. It's just basically at the 70 fib that I use on a daily. Right, any more questions at all? If not, I will leave that there. Let's continue to make some good pips this week after a strong start to the week today. And let's go. Right, well, enjoy the rest of your nights. Take care and see you later. And just a quick reminder, these webinars will be moved to Monday night permanently. All right, take care all and see you later.